Take care.
Beware of investing in Chinese companies, even if they're listed on U.S. stock exchanges. So says our next guest, securities lawyer Andrew Stoltmann, who joins us now from Chicago. Thanks for being with us, Andrew. Happy Friday. Please state your opening argument, sir.
Absolutely. Well, I mean, investing in China, it's a little bit like the wild, wild west. I've compared it to kind of walking through a landmine. Imagine investing in American companies back in the 1930s without a Securities and Exchange Commission, without a Sarbanes-Oxley, without generally accepted accounting principles that we so cherish in this country. It's extraordinarily risky, and some of the smartest minds on Wall Street, including John Paulson and Hank Greenberg, have got burned in Chinese companies. So you have to be extraordinarily careful when investing in these companies, even if they're listed on American exchanges.
Well done, sir. Now, that litany of things that China companies don't have, the SEC and Sarbanes-Oxley and all that, I thought that we would wipe that out when a China company is allowed to list on the NASDAQ, to list on the New York Stock Exchange. Why is it that that doesn't protect me?
Well, it doesn't, and that's a great point, because the exchanges, in addition to the companies that have been listed, deserve a lot of the blame, because you expect when a company is listed on an American exchange that there's a certain level of due diligence. Unfortunately, we just haven't seen that, and part of the problem is that China has been so uncooperative with Mary Shapiro, our former SEC commissioner, and Americans in general in providing those detailed numbers, the audited financials. So, yeah, just the fact that it's listed on an exchange, it's certainly not a guarantee in any way whatsoever.
Right. And yet, Andrew, you kind of propose a sledgehammer solution to this fearful problem. That is, don't ever invest in any China company at all. Isn't that kind of a drastic solution? And for fraidy cats, how about someone decides to do their research? If you're doing business in the U.S. and you're doing business with a China supplier that actually is very good, maybe you have a little extra reason to trust that you could buy the stock in that company. You are causing investors to miss out on opportunity at a time when China's manufacturing growth just more than doubled expectations. It could be coming out of slump, and the entire China market could be heading up. But you fraidy cats out there say, no, don't ever invest in any China stock ever?
Well, actually, in individual stocks, absolutely not. If you're going to do it through a mutual fund. And I don't mean to sound redundant, but if the smartest minds on Wall Street, including some of our top hedge fund managers, are getting burned investing in individual stocks, then I hardly think the retail investor or the average investor in America should do it. It's a sucker's play. And if you're going to do it, look at an exchange-traded fund, look at an index fund, and maybe make certain that you have 100, 200, 300 different stocks out there. So if something does go wrong, and we all know what happens with Chinese companies, at least you're not losing too much money.
Gotcha. Boy, you're good on this, and it sounds like you personally have experience in this, that you got ripped off in some China company. So let me try one more curveball for you. What about the idea that the entire China stock market is set for a big rally? I'm just going to buy that and play it and get out. I don't need to buy a company that I believe in. I just need to buy a stock price that I think is going to go higher.
Well, I love it if you are indeed talking about the mutual fund. I think it's a great play. I think it's a great idea. I personally have money in China, and I like it myself. The warning that I'm trying to get out there is just watch out for those individual companies. If you're going to do it, invest in a whole bunch, preferably professionally managed or in an index, so you can make certain that you're not like so many other people that have literally lost billions of dollars. The SEC came out with a study that showed the losses in Chinese company are approximately $20 billion. That's the same amount that was lost in Bernie Madoff scam. So you just have to be really careful.
All right. Very good job, sir. And we're going to let you get away, Andrew Stoltmann, without explaining the utter contradiction between don't ever buy any China stock and instead, if you must, invest in mutual funds made up of hundreds of China stocks. Thanks very much, Andrew. Have a good weekend.
Anytime. Thank you.